Hi, this is Greg. Welcome to the channel. On this channel we talk about markets and investment, and we have been having a continuing dialogue on this channel about Viacom and its incredible undervaluation, and we've been sort of at a loss to figure out why it's not moving, given the fact that it's trading at only 10 times earnings versus some of its other competitors, Comcast for example, at 24 times earnings. But on this video we're going to talk about one of the secret weapons that this company has in the streaming wars, and that is Viacom's secret streaming strategy. Now, the reason I think this is important is because I think people are not really focusing on some of the underlying value in this company, and that's partially the reason why it's done absolutely nothing since April. I guess I should correct myself about that. It did break out a little bit last week, but then it came, went up to like 47, but then it came right down back to 41 and change, 42. It's been extremely frustrating since I put my long-dated option positions on. To reiterate from some of the other videos I've done, and I'll put them in the description and also at the end of the video, I purchased the 55 strike price January 23 calls on Viacom as an alternative to owning the stock, because I'm looking at this as a trade. Okay, so before we get started on the rest of the video, if you get value out of this, please like and subscribe, and don't forget to hit the bell so you can be notified when I come out with more videos. Okay, so what I've said in some of the previous videos, and I've done about 3 on them, which I'll put in the description, and I'll put the latest one at the end. I have shared the view that I think that following the Archegos disaster, where the stock went from $100 a share down to $55 a share, and then it continued to go down to $39 a share before it rallied up to 41, 42, and it's basically stayed there since April 2021. And I've been very frustrated, and I haven't been able to really figure out why a stock like this with so much value and so many great assets just literally sits there and does absolutely nothing. I mean, I've practically never seen that in the 30 years that I've been following the stock market, and going back to when I was in investment banking years ago. But that being as it may, I've been doing some research, and I've discovered a secret weapon that Viacom has in the streaming wars. Right now, most people, everybody is aware, and I've talked about this on previous videos, that Paramount Plus, which is a streaming service that Viacom started a while ago, is doing very well. And Paramount, of course, that brand has got an enormous catalog of content, movies, and all kinds of things that will be popular on their streaming site. But one thing that I don't think people are focusing on with respect to future growth in the streaming platform is Pluto TV. Now, Pluto TV was purchased, I believe, at the beginning of 2019. When it was purchased, it had 12 million monthly active users, MAUs, and now, in 2021, it's got 50 million. That's incredible growth. And you can see that growth on this chart here. Take a look at this chart. Here you see Viacom's global streaming customers by type. You can see that the Pluto TV MAUs, you can see the trajectory that it's achieved with the red line. And the blue line is its overall streaming customers, and those streaming customers are basically subscribers, and that would be the Paramount Plus and whatever other products they have for streaming subscribers. You can see that the Pluto TV MAUs have vastly outperformed the paid subscriber model. Now, why is this? This is because Pluto is, you don't sign up and pay a monthly fee for it because their revenues come from ad revenues. Apparently this model has become quite popular with, I'll just give you a couple data points here that interest me. Pluto has helped Viacom grow its streaming ad revenue by 41% year over year in 2020. And in the first quarter of 2021, it grew ad growth by 62%. That is amazing. In addition, revenues attributable to advertising was up 52% as a percent of total streaming income. And in fact, it's predicted by many of the analysts and also to some extent by the company that total ad revenue in the US alone will grow by 78% year over year from 786 million to over $1 billion by 2022. Okay, I don't think this level of growth is reflected in the stock, and I don't think that Wall Street analysts are really focusing on this area of growth in their streaming, which of course, as we all know, commands a higher multiple in the market than does, you know, cable and traditional broadcast television like CBS. In addition, another asset of theirs, Showtime, which is obviously a very popular platform, is showing significant growth in terms of signups and engagements in 2021. The other amazing thing about Viacom that people don't seem to focus on is its financial performance. I mean, financially, this company is very strong. Viacom pays a dividend, a very nice dividend. At its current closing price, it pays a 2.21% annualized dividend. That's not bad. I mean, it's not as on the same level as Exxon or somebody like that, but that's a decent rate of return to be paid on your money while you're waiting for the stock to go up. In addition, look at the free cash flow. In the first quarter, they had $1.6 billion in free cash flow, as compared to last year's first quarter, $306 million. That again is an indicator of increasing value, increasing financial performance, and it should reflect in the stock, but for some reason it doesn't. Okay, so right now I'm going to talk about the 4 reasons why I really like Viacom, and I think I'm going to give it another couple months. It's been, you know, very frustrating, and as you know, if you watch this channel, since April, right, there's been all this good news coming out, and you've had basically nothing. So here are my top 4 reasons why I think you should pay attention to Viacom and why I think it's undervalued and it's definitely a buy at these levels. Number 1, valuation. Okay, as I've said on previous videos, and it's still true today, it's selling at roughly 10 times earnings. You look at Comcast, you look at Disney, you look at Discovery, you look at any of the other companies that Viacom competes with, they're all at higher multiples. Comcast, for example, is 24 times earnings. This is a ridiculous difference. It's more than twice. Now, I've said on previous videos that, okay, you want to give Viacom a lower multiple because they have a lower penetration and lower scale in streaming. Okay, I get it. But other than that, they're in all the same businesses. So what should it be? Should it be 15, 18? Not 10. Okay? 10 versus 24? No. That doesn't make any sense. So that's my first reason. Second reason, strong financial performance. I mean, this firm had a very, very good first quarter, and as I've said on previous videos, they clocked in at $1.52 a share versus analysts' estimates of $1.22. So they beat analysts' expectations by 24%. And what happens? Nothing. Nada. Nothing happens. I've never seen anything like this, guys. Seriously. Number 3. Okay, you want to knock them for being behind in streaming? Okay, Paramount Plus and Pluto TV are showing extremely strong streaming signups and also advertising growth. And advertising revenue is becoming a larger and larger percentage of their total streaming revenue. And this business is growing so fast, so the reason that the market is penalizing them is actually one of the strongest reasons why you should look at the stock and consider this company very seriously. And then finally, number 4, this company has an extremely strong balance sheet. I mean, I nearly fell off my chair when I discovered that at the end of the first quarter they had $5.5 billion in cash on the balance sheet. That's extraordinary. In addition, they're paying a very nice dividend, and they're in a financial position where they can continue to not only pay the dividend, but potentially increase the dividend as time goes on. Okay, so what do we do with this information? I'm just going to tell you what I'm doing. At 43 and change, as I said last couple of weeks, it did break out. I was going to do a video talking about how it broke out, but unfortunately a day later it came back down. So it broke out temporarily, went up to 47, and I started to get all excited because many analysts are talking about it going to above 50, which is where I think it should be. I think it should be 53, 55, where it should be. But in any case, now it's back down to 43 and changed. It rallied a little bit today. In any event, I think it's still a buy. You could either buy the stock and get the over 2% dividend, which is very nice, and you could hold it you know, for several months or even a year or two. I think you would do quite well on it. Or you can do what I'm doing, where I bought the long dated calls. I bought the January 23 55 strike price long dated calls. That gives me until January of 2023 to be right. Yes, I had to pay a little bit more for these options because they are long dated and there's a lot of time value, so you're paying for that time value. But even with that time value, I felt that the options were reasonably priced. So far I'm a little bit ahead on that trade, but overall with Viacom I'm either flat or slightly negative so far. So anyway, keep your eye on this one. I think it's a good one, and please, if you got value out of this, please like and subscribe, and don't forget to hit the bell so you can get notified when I come out with more videos. I try to put out at least 2 a week, and we're going to be delving more into attractive investments, and we're going to be talking about the market, keeping you up to date on everything that's going on. The purpose of this channel is to talk about the markets, to make you a smarter investor, to point out attractive investment opportunities, and to all around make you a smarter investor so you can benefit your family, yourself, and your future.